So consolidated markets, this is my perspective, a price action perspective, and how to trade them, why they happen, and it's basically how to read what price is trying to do. So let's go to the monthly and just identify any long-term consolidation. Maybe I'll keep the drawings. So let's actually keep the drawings. We'll keep the drawings just for the sake of keeping them. So let's head over to the daily. And I think it's 4 is fine. So let's do 4 hour. So consolidation. Now, what I mean by consolidating markets is usually, so let's say, let's pull back a bit. We all can obviously can see it's a downtrend, right? If you just take a look at the snapshot from 30th July 2020, right? This is where we started a downtrend, right? Making significant lower highs, lower lows, obviously in a downtrend, right? Now, what I mean by markets are choppy or consolidated is when you have price action like this, right? So if you look at, this is a nice trend right here, where you have nice consecutive candles. You have consecutive candles, right? Consecutive bearish candles, right? Here's a nice trend here as well. Consecutive bullish candles. A nice trend here. Consecutive bearish candle. A nice trend here, consecutive bull, consecutive bear. And then you come into this type of price action right here, right? This section where there's not any consecutive candles, right? You have a bullish, a bearish, bearish, bullish, bearish, bullish, bearish. It switches every other candle or every second candle. You can't really trade this. I mean, you can, right? Because since you're trading with the trend and you do go short, let's say you just go short here, right? I mean, you can trade this, right? And say your TP is down, you can trade this. You'd be in some profit, but you could have instances of deep drawdown, right? When prices magically retraces this high, then bouts of some profit, going into profit, coming out of profit, going into profit. It gets very annoying to trade. That's what I mean by the markets are being choppy. Now, when you're trading with the trend, the benefit is that regardless of the choppiness, right? So this choppiness, price usually breaks out in the original trend direction. So if we're in a downtrend, right, like this, and we start consolidating, price usually continues in that direction once we break out, right? And what most people do is, you can always see, is they align, they just measure the previous down move. So let's say this was, we're in a downtrend. So measure the previous down move, which is, 112 pips until we started consolidating. And the thought process is, hey, you know what? If we break out this consolidation box, price should move 112 pips, and that's where TP will be. Something like that, right? And that's what brings us to our trading philosophy of identifying the low of the consolidation box. And so this wick right here made a sneaky, let me move this box. This wick right here made a sneaky low, and we're waiting for price to close bearish below this level to go short. Otherwise, anything that happens here is going to be choppy, a mess. It's just going to be disgusting to trade, which we don't want to partake in, right? The less we're in the markets, the better. People like to be in a trade for the sake of being in a trade, but if you're just going to be playing ping pong between two levels, what is the point of being in that trade, right? Especially when there's a lot of news, right? Forex, I think, has the most news events in the world. Earning reports come once in a while for a stock, but Forex, we have CPI, inflation, PPI, core retail sales, FOMC, Trump speeches, all kinds of stuff that can make the markets move. So the less time you're holding the trade, the better. So again, USD CAD, we're bearish for the week, but it still happens when you're consolidated. And if you just look at past examples of what happens, and sometimes when we do consolidate, price does break out to the upside, even though we're in a downtrend, which is fine because usually that's a fake out, and then the buyers get ripped. Because when you have a strong trend like this one, right, and you can just go to the daily, this is a strong downtrend, right? And even though we, like, for example, look at since June, we've been in a strong downtrend, and even before that, yes, we've had a mini rally, a bull rally, but Before that, we had a nice strong downtrend as well, right? Since March 2020, we've started that downtrend. That's where the downtrend started. So, although it's not been a textbook downtrend where you make consecutive lower highs and lower lows, we're still making lows as we speak, right? So all the highs have become lower. There's a section where price started to make some retraces back up, but then that sell-off resumed again. So the downtrend is so strong that looking for buys is playing a bad game, right? You're playing a losing game. So that's where consolidation tricks traders, right? So that's why when we consolidate, always look for a breakout lower than higher, unless fundamentals change or we come to support, then maybe I'll change my opinion. So if you look in the past, for example, where some traders would have got bit, for example, right here. So here, candles started to lose separation, right? You can see, candles aren't as bigger. You start to see bearish, bullish, bullish, bearish, bullish. And so if you get this breakout, a lot of newbie traders would go long, right? They would go long after this breakout, and they'd go long to this next key level. That's a nice kind of, way of thinking. Price went up a bit and then just immediately slammed back down in the original trend direction. And you can see that happen many, many times. Here's another example. Obviously, it's not as exaggerated, but again, consolidation and price jumped up. And if you didn't go along here, a newbie trader would have seen, consecutive higher highs and higher highs being made, and they would have went long somewhere up here, and then immediately price sold off and you get stopped there, right? That's why it's so dangerous to go against the trade. I'd rather wait for the consolidation box to begin. And here's another example. Consolidation, you have a huge candle. A beginner trader would be like, oh my god, it's a bullish engulfing. Once that happens, look what happens again. Price consolidates. Price consolidates. And what did I say? When price consolidates, look for a break in the original trend direction. The original trend direction is a short. So if you traded this consolidation box, wait for the break below. You get a break below. Price even gave you a gift of breaking below, retesting, rejecting. You enter short, you make nice, decent intraday profit around 123 pips. It's just that simple, right? And I'm not even nitpicking examples. Here's another consolidation box right here, right? Consolidating, bearish, bullish, bearish, bearish, bullish, bearish, and then price breaks out. You have a nice sell-off, right? And it just goes on and on. Here's another consolidation phase right here. I mean, this is boring. This will put you to sleep. And these are 4-hour candles, so these are a session, right? A session apiece, basically. Wait for that nice bearish candle, you sell off. And that's what I'm doing with USD CAD this week, and which we did for UJ this week, and that short paid off well, right? Here's another consolidation box. Price broke out and we sold off. It's not rocket science. We're not doing anything special. We're just trading with the trend. Here's a perfect example, and I believe we caught this trade, and this was way back in May. Right, consolidation, a lot of consolidation. We used support here. We broke support. We even retested it. Nice rejection candle, and the rest was history. Here's another example, and I may be going overkill, but I want to get this into people's heads. Right, original trend is short. Wait for a break at the bottom, and you get a nice sell-off. So that's how you trade consolidation. You wait. I know you might feel peer pressure to enter a trade because so and so is in the trade, and etc. etc. Focus on your own path. It is your trading account. It's your money. Don't worry about what anyone else is doing. And the more you stick to your own trading plan, the more confident you'll be. And you'll be able to trade without looking at anyone else's ideas, without worrying about what so-and-so is doing. And you just focus on what the markets are doing for you. That's how you trade consolidation. Be patient. There's nothing that you're going to miss out here. I'd rather miss out on 10, 15 pips than rush an entry and lose 50 pips. Because I couldn't be patient. So hopefully the lesson helps. It's more of just going on the chart and back testing, right? So just looking at past patterns and to see what price does. This was an example in a downtrend, but it's the same in an uptrend. We're just looking for price to break out to the upside, right? So that's that. We do have some choppy conditions because of fundamentals, but this type of stuff happens even when there's not a pandemic going on. So I hope that helps.